Welcome to Wall Street Sizing Up. Today, billionaires sliding into their skinny jeans. Second, a big mistake by this guy. Finally, a programming note. I hear you. Top ETFs next week with an asterisk. That said, let's pull back the curtain and hit the casino. Let's go. Again, welcome to Wall Street Sizing Up. Welcome to the channel, the only channel that allows you to profit off the insider knowledge of the hedge fund bros. You're in the right place, and I have heard your pleas. I've got your emails. I've got the communications. Then yes, we will do the top ETFs. But here's the thing. It ain't going to be just like top 10, what's the best ETF. It ain't going to be like that. No. It's going to be the most aggressive ETFs of 2020 and moving forward. That being said, I do want to say hello to our new 150 new subscribers. Thank you very much. I see you, Bear Grylls. So, today, our first stock is AEO. That is American Eagle. Let's go to the chart. You see it there. The weekly is just a beautiful chart. What do? If you're not wearing their clothes, I'm pretty sure your kids are, if you have kids. The multi-brand specialty retailer offers assortment of apparel and accessories for men and women under the American Eagle Outfitters brand. Intimates and apparel and personal care accessories. That is phenomenal. We've all walked them all. We've all seen their stores. Very dark inside, you ask me.
Oh, you think darkness is your ally?
But hey, kind of cool. $2 billion market cap and 6.5 million shares traded per day. You see what I see. We are definitely in an uptrend here as far as the weekly goes. It's smooth. It's got some growing wild capillaries here. Up, little pump, little pullback, little up, pump. There we go. Serious uptrend though, and I think that might continue. So let's look at the monthly. I want to look at the monthly and just kind of, so what's going on here? They went on a high sucrose Sherpa-led expedition. We had a little bit of a slide. And then you see the uptrend that we're in now. So here's the thing. One of the best, maybe a friend of the channel by now. On the 27th, a man named Steve Cohen of 0.72. We talked about him last week. He doesn't size up often, but when he does, the man is LinkedIn connected. A LinkedIn line hits that P2P, pulls the chairman aside, if you know what I mean. Let's look at there's 0.72. You know what they do. They make money. We invest in discretionary, long, short, macro, and systemic strategies. Again, anything that makes money. In fact, the show Billions is modeled off Steve Cohen.
Yeah. Got a plan that's starting to form.
Now, Steve Cohen's got $91 billion under management. Now, 0.72, the hedge fund, just has $16 billion. But he does private equity, and you can see all of the different entities that he has, including 0.72. He also does some VC investing. Here's the thing about Mr. Cohen, Mr. Steve Cohen. So, started his business career in 1970. I did find this interesting. Maybe this is lore, I don't know. But his first day, he made $8,000 of profit. In 1978, playa. That's pretty phenomenal. Here's the thing. So he starts SAC Capital Advisors back in, looks like 92. Well, in 2012, they get in a little trouble with the SEC for insider trading. A hedge fund? No. Yep, that's what happens. They plead guilty. 2013, they pay $1.8 billion. Shortly thereafter, they transfer all of their assets to a new entity called 0.72, and that's where we're at. And the reason I call him Major Leagues is because you can see here, Cohen is a minority owner of the New York Mets with an 8% stake. But as of August 27, which is funny that date, news source announced that Cohen had entered into an exclusive negotiations to become the majority or controlling interest of the New York Mets. Well, congratulations to him. That deal has not happened, but I'm sure it will if he wants it to. Back to AEO. Monthly chart. Here's the thing. On the 27th, that same day, that's when our man Steve Cohen, 0.72, sized up. Now, prior to this, he has been in AEO. He's loved this stock. Now, he hadn't been highly convicted, but he's been in this stock, it looks like, since 2013. Again, back to the days where we had some issues with the SEC. He's just been trading in and out. So what does that tell you? When you go back years, 5 years, 10 years, it means that he knows management, he knows the price action, he knows the trading range. He just knows what's going on with the stock. And that's the thing. So on the 27th, he sizes up. So prior to that, he had 3 million shares going back to June. Let's go June 30th right here. He had 3.8. Somewhere in here he sold. There is no form that I see or that I can find in the Edgar database, so it's a little bit hidden. But what we do know is that he buys, if we go back to the monthly, he buys on the 27th 7.7 for a total of 8.3 million shares. Now, let me put that in perspective. That's a $100 million position in a retail company that's really not executing on an e-commerce strategy, right? What they are doing, what did happen, why this uptrend started, from what I can tell from the catalyst, would have been JP Morgan. They went to a bullish outlook and they gave AEO here a target price of $17. You could see at that point it was around upwards of 10, around $11. So boom, that starts the uptrend. And that's where we are. Again, sized up for $100 million, a 5% highly convicted. So you can see what took place here. Up we go on a high sucrose Sherpa led expedition. Pulls back a little bit to the downside. Here's the 3 month. When in doubt, zoom out. It's backpedaling down here to the downside for a long time, which most of the retail stocks are. I'm not a big fan of the retail sector, but I will tell you this. It seems that American Eagle is doing some very good things, because if you go to the year, here's March, and they're trending to the upside. So again, back to the 3 month, you see it, and here we go. Start that uptrend. We got a little pullback, uptrend. So just this is a normal thing, you would think. But again, hits that juice hitter to the upside, which we like to see. Steve Cohen jumps in. That's why I'm giving this 4 cash bags. Why? 1, I think we can catch this in an uptrend, which we are. 2, Steve Cohen is highly convicted with a $100 million position. He's only, at best, he's gotten 7%. Could he have gotten out? Sure. I don't think he's like that. Now, he is a pump and run guy. Don't get me wrong. He's got about 500 investment professionals that work for him. He's got 1,500 people who do research for him. But he does not like to stay in stocks long. And if he does, he gets in, gets out, because he knows management and the trading range, just like I said before. That being said, I think this is a really good start. I don't know how long this trend continues. Get your 5%, get your 10%, maybe even get your 20%. But then I would get out. This is not a long-term investment. This is a swing trade, maybe a week, maybe 2. And then I'm out. Again, if it starts to go to the downside, cut your losses and get out. But I think it continues up. I think it gets to probably the $14, $15 mark, and then you'll see a little bit more turbulence, a little bit of twerking, if you would. That said, next stock. Onward. And there it is. You see it on the screen. CRDF. That's the ticker symbol CRDF. Cardiff Oncology. What do? Well, Biotech, that's for sure, right? Therapeutics company which engages in development of drugs that target mitosis for treatment of various types of cancer. Out of San Diego, founded in 1999, market cap of almost 200 million, and it trades almost 1 million shares a day. Almost a penny stock, but not. It's very aggressive planking here. Got a little sweaty, got tired, and boom to the upside with a little 5% pump. Here's the thing about CRDF. I really want to know more about what they did. Full disclosure though, guys, I was in this stock, I'm not kidding you, for like 3 months up until like the 1st of July. I don't know why I got out. I think there was a slight downturn, whatever. I made some money. I'm going to be real honest about that. But then all of a sudden, bam, it turns up. Opal management sized up. But I wanted to kind of give you a little bit about what they actually do, because that didn't say anything except types of cancer. Well, the types of cancer are, there's not a lot of catalyst events. Their website's great, but there's really no catalyst events. I checked Biopharm Catalyst, and as far back as I could go, I didn't see anything from CRDF, and then going forward, I didn't see anything for a PDUFA date. What I did find is this PR release, right, with the cancers, the rectal cancer, the prostate cancer, and the leukemia. I think that's what Chadwick Boseman died of, so rest in peace, Black Panther. Also, it's showing phase 1 and phase 2 trials are going good. $25 million from equity investments by biotech-focused institutional investors. That's great. They exercise their warrants for funding for clinical study. And that's about it. There's something about this stock that's going on that is under the surface. And that's what I saw before when I had invested in it. I don't have a position now. Clearly you can see that. But I had a position. Here's the thing. This is the weekly, nice little 4% weekly. Here's what you want to see right here, guys. Look at this. Just a beautiful 3-month. I'm in love with this chart. You want to romance it?
I was supposed to say that you are the perfect combination of sexy and cute.
Kind of tearing up a little bit because I got out about right here. But this 3 months, that's a 200% to the upside, players. And I missed a lot of that. A lot of that. So no, I'm angry. But you know who's not? It's a man named James Silverman of Opal Management. Let's see who they are. Could not find a lot. One reason is don't have a website. So very secretive, little stealth mode, if you would. What I'm finding is about 300 million to about 500 million AUM is kind of what different websites say. Clearly they're in biotech, life sciences, medical devices. You can see down here, that's all biotech. So, and they seem to hold long term. The reason that I say that is because if you look at the chart, let me go to the 3 month. All hedge funds have to file a 13F. He filed his on June 30th, and he was already in this stock, CRDF. So he somehow, somewhere got in the stock in June of this year. He probably caught this pump, which is nice. He then stays through this sideways movement, this little plank here, gets a little upside here, nice little pullback, more upside, pullback, and then far more upside, which I wish I had gotten. Thing about it is, he sized up again though. If we go back to the monthly. So right here, on August 19th, he takes a 20 to 30% pump here, right? Now he's been in this since June. So I'm not saying he's long term, but he's longer term. He's not just going to take a 5 or 10% pump. That's my feeling about this. But that being said, since he got in, he is up about 30%. Could he have gotten out? Absolutely. But here's the thing. Past results are not indicative of future results. Wish I'd have known that a little bit more. And I think I took it too far and did not stay in. I think I got out right here with this, where it just kind of topples over a little bit and took profits. Is that if I was going to go long term in a biotech stock that I've done on the channel, it would probably be this stock here. Yeah, with that said, I do think that Mr. Silverman took this 23rd% pump here, and I think that he got out. It went into playing, and as of Friday, the entire macro economy just kind of dropped out here, and CRDF is down 28%. It's making its way back. So what I would say, this is 3 cash bags. Bring it three cash bags. I do think that the hedge fund is out. I do think this is a very good entry point for you right at the $6 mark. I still like this stock. Do your own research. Again, past performance is not indicative of future performance. There is no catalyst that caused this in this stock except for the macro environment. This may be one you want to put on your watch list, or just buy a couple shares, and if it does start to trend up more now, I would jump on it. That's what I'm going to do. Just wanted to jump on here because it did go down 28%. So, that being said, guys, thanks for joining. We'll see you. Well, that'll do it for today's program. A big thanks to all the viewers out there, and you know who you are. Charles Barkley and Nick Cage, thanks for stopping by the channel and sizing up today with us. Please leave me a comment on how much I suck, or something a little bit more constructive, because it's always great to hear from smarter people than me. And please blast a like, blast the subscribe button, because we are done here. But we'll be back tomorrow. And as always, watch your 6 and go hard in the paint. We'll see you.